And I gotta say, I was not expecting to hear this from Switzerland. I'll be honest. I really think what I'm about to read you would be more appropriate from Iceland. But at the same time, I don't care where this is from. Whatever country is making a move like this is good. But I'm going to tell you the problem is that because enough signatures have been met, they're going to hold a referendum. And you know what that means? People are going to have to use them voting machines to vote on something. And what this something is about, the club don't want you voting yes on. And I think there's proof from a year ago that them old Diebold voting machines kicked into gear right when they needed to. And therefore will kick into gear again when the club needs them to, when they vote on what I'm about to talk to you about. So Zero Hedge has this article, Switzerland to vote on ending fractional reserve banking. What? That is a no-no when it comes to the financial elite, or the club, if you will. So it says 1 year ago, and just 2 months before the shocking announcement, the Swiss franc's peg to the euro would end, dramatically revaluing the currency and leading to massive FX losses around the globe and for the Swiss National Bank, the Swiss held a referendum whether to demand that their central bank should convert 20% of its reserves into gold, up from just 7% currently at the time. After the early polls showed the yes vote taking a surprising lead, the Diebold machines kicked in, and the result was a sweeping victory for the no vote, without a single canton voting for sound money. And the ultimate result was that 77% voted no. And they had these cantons. I guess that's kind of like regional. You know how we have like the electoral college? So you and I can vote however the hell we want and think, oh, Donald Trump's going to win. We gave him the vote. And then the electoral college says, no, we're not voting for him. And then someone else wins, right? Well, I guess they have these little areas or cantons, right? 0 cantons said, yeah, let's do it. 23, we're not going to do it. So that was a year ago. So ironically, this unexpected nonchalance about the Swiss central bank's balance sheet by one of Europe's more reasonable nations took place just before the same bank announced 30 billion in losses on its long euro positions following the revaluation of their currency, the CHF. It also took place when not just Germany, but the Netherlands and Austria announced they would repatriate a major portion of their gold in a move which, all spin aside, signals rising concerns about the existing monetary system. We wonder if the Swiss have changed their mind about just how prudent it is to have their central bank operate as one of the world's largest and worst, after its 30 billion loss in quarter one, FX traders and hedge funds with 94 billion in stock holdings since then. We may soon have the answer because in what is shaping up to be another historic referendum on the treatment of money, earlier today, the Swiss federal government, again, this was posted, I think, yesterday. No, take that back. Today is today, which is the 24th. Tomorrow you will see this video. So earlier today, the Swiss federal government confirmed that it had received enough signatures and would hold a referendum as part of the so-called Volgeld, or Full Money Initiative, also known as the Campaign for Monetary Reform, which seeks to ban commercial banks from creating money, and which calls for the central bank to be given sole power to create the money in the financial system. In other words, an initiative to ban fractional reserve banking and revert to a 100% reserve. As Finanzen.ch for China reports, after 111,000 signatures urging a referendum were submitted, of which 110.955 or 110,955 were actually valid, the federal chancellery announced on Thursday that the popular vote would take place. Under Switzerland's direct democracy, a referendum can be held if a motion gains 100,000 signatures within 18 months of launching. Quote, banks won't be able to create money for themselves anymore. They'll only be able to lend money that they have from savers or other banks, said the campaign group. Think about that line. Banks won't be able to create money for themselves. I thought the central banks and the government created money. You mean to tell me that commercial banks are creating money out of thin air to loan to people like you and me? And God forbid if one of us can't pay it back or realizes the game and says, I'm not paying it back, you guys created it out of the thin air. My wife just lost her job and I'm struggling making payments. Print more money out of thin air if it's so easy. Write my house off, as a matter of fact, just print some more money. Create it. Fractional reserve lending. You see, normally, let's say you put $100,000. You have $100,000, first of all, and you put it in the bank. The bank will now be able to lend out 90% of that. So you're essentially left with $10,000. Now, your statement says, no, 100,000 is in here, and even though we just took 90,000 of your dollars to lend out new loans to people around here, you could, in theory, come in tomorrow and say, I'm withdrawing all my money, send it to this other bank, I'm changing banks or whatever, and they will do it. But what happens is that reserve requirement that all banks have to have, a certain percentage, you just took a chunk out of that because you just withdrew the money after they already lent it out to some people, 90% of it. So now their reserve requirement may be hurting. Now, it may not with 100,000, because considering billions, some of the bigger banks, easily billions of dollars are in there. Your little 100,000 means nothing. Whether you gave it to them, they lent 90% of it out, and then you came in the next day and said, I want my money back, I'm going somewhere else. I'm put my money in another bank. The point is, though, they just lent out 90% of your money. So in theory, it went away. It went somewhere else. So how is it that the bank, can then issue your full 100,000 in a check, bank check, for you to go to another bank and deposit it? The money did go somewhere. It's gone. So the other issue here is that if it's a ratio of 9-to-1 roughly that they can lend out, from what I've read, and it's been a long time since I've really covered this, or really looked back into it, but from what I remember reading about this whole thing, that same example where, I give $100,000 and I put $100,000 in my bank, they can lend out 90. Some banks, I should say, maybe all of them, I don't know. Maybe it's common practice, I don't know. They'll say, okay, well, they kind of do it backwards. We got $100,000 in here. We're going to lend out 9 times that value, $900,000. So your initial, like for example, in the first example, I said they took 90,000 out to lend to everybody else. That left you essentially with 10,000. Now, again, the numbers don't say that, but just follow me. You're left with 10%. So in other words, in their mind, the 100,000 he just put in, that's our 10%. So now we'll create money out of that, upwards of 900,000 in loans. And supposedly this, that little accounting trick or whatever you want to call it, banks have been doing it. It's common for some of them. Get some little bit of this Fiji. I'm not gonna lie, this is some good water. It is definitely good stuff. So back to this article. It says, in other words, an initiative to ban fractional reserve lending. Banks won't be able to create money for themselves anymore. They'll only be able to lend money that they have for savers or other banks, from savers or other banks, said the campaign group. End quote. Ever since the SNB, which is their currency, or excuse me, not their currency, their bank, the central bank, Swiss National Bank, I think is what it's called, was established in 1891, it has had exclusive power to mint coins and issue Swiss banknotes. However, as with every other fractional reserve banking system, over 90% of the money in circulation in Switzerland as in every other country, now exists in the form of electronic cash created by private banks rather than the central bank. It is this threat of uncontrolled money creation and the risks to systemic stability that the Volgeld campaign is seeking to stem. Quote, due to an emergence of electronic payment transactions, banks have regained the opportunity to create their own money, said the Swiss sovereign money campaign. The decision taken by the people in 1891 has fallen into oblivion. So, with the referendum now docketed, will this vote, too, be mysteriously lost in the final minutes of voting? According to the Telegraph, unlike the gold vote, which was seen as a precursor to reintroducing the gold standard in Switzerland, economists have been more supportive of the idea of sovereign money as a way to stabilize the economy and prevent excess growth, credit growth. A date for the Swiss referendum has not been set. If the vote passes, and I'm going to say likely it won't because of the voting machines that we love to use these days, they're electronic, they are absolutely rigged. But anyways, if by chance, maybe it doesn't happen or they don't use those machines or whatever, the vote passes, and if Swiss banks are barred from creating deposits by way of loans, it would shake to the core the entire modern financial system. Now I'm going to stop for 1 second. Shake to the core the entire modern financial system? There is nothing modern about it. Fractional reserve lending has been going on forever. It's the central bankers club method to their wealth and owning everything in the damn world and just printing money to give to their big banker friends. And then they too get to then fractional reserve lend it out, making them even richer. But this isn't, I realize it's saying modern. In other words, I'd replace modern with current. It would shake to the core the entire current financial system, because it ain't modern. Maybe that was a typo there. Which these days is exclusively reliant on runaway fractionalization of sound money as more and more layers are added to the top of the Exter's pyramid as the only possible growth left in a world that was or has never seen so much debt is to find new and creative ways to borrow from the future, with banks getting all the benefits and stuffing taxpayers with the when the inevitable collapse happens. You get stuck with that. Below is a PDF provided by the Volgeld Initiative, responding to popular criticism against its 100% reserve crusade. So, number one, will or won't the sovereign money initiative lead to a reduction of the banking sector in Switzerland? Answer: on the contrary, with sovereign money, the Swiss franc will become the safest currency in the world. That's a huge competitive advantage for Swiss banks. So they're likely to win lots of new business in the area of wealth management. The sovereign money reform will encourage a higher standard of quality controls in the financial industry, as is normal for industries in the real economy. This will ensure that Swiss banking jobs are future-proofed. After a sovereign money reform, banks will no longer be able to trade with money they have created for themselves. This is likely to lead to a reduction in the number of people employed in investment banking. This has already been observed over the last few months as this business model is becoming less and less viable. Yes, they have cut tens of thousands over and over from the big banks' employment in, yes, very recent times. Banking will be profitable and stable with the traditional business model. Jobs in banking will be safe. This model has already been shown to work as it is in use by Post Finance, which is the financial service run from the post offices in Switzerland, which is operating successfully without being able to create money. Post Finance doesn't have a banking license, so it can't create money. Instead, it has to work with money it has from savers or by borrowing from other banks. Over the last few years, Post Finance has made an average profit of about CHF 600 million. Other financial firms and insurance companies are also profitable businesses without being able to create money. Number 2, is it possible for Switzerland to bring in a sovereign money reform alone? Yes. Fundamentally, it's irrelevant to organizations outside Switzerland how money is created inside Switzerland, whether it's backed with gold or not, or whether the minimum banking reserve is 2, 10, or 100%. For them, it's more important that the Swiss National Bank has a good monetary policy which maintains price stability. International business partners from outside Switzerland won't notice anything different when Switzerland changes over to sovereign money. Foreign exchange trading will continue as now, and foreign currencies will continue to be able to be exchanged with Swiss francs. Switzerland will profit from the advantages of sovereign money, regardless of whether other countries bring in a sovereign money reform or not. Number 3, does it follow that there will be upwards pressure on the Swiss franc? As sovereign money is so good and secure, there is a danger that funds will flow into Switzerland, putting an upwards pressure on the value of the Swiss franc. The Swiss National Bank already has experienced this and can take appropriate measures in order to stabilize the exchange rate. In addition to targeted foreign exchange purchases, there are also other proven interventions, such as introducing negative interest rates for foreign investors or capital controls. A weak currency is generally much more of a problem to a country than a strong one. Number 4, won't sovereign money result in a threat to the independence of the Swiss National Bank or a concentration of power in the Swiss National Bank? No, it's not that the Swiss National Bank will be given a major new mandate with the introduction of sovereign money, but rather that it will have more effective instruments with which it can fulfill its current mandate. The Swiss National Bank will only have responsibility for the total money supply, not for individual loans. The Swiss bank acts only in accordance with the Swiss Constitution and the law, and therefore acts independently from the Swiss Federal Council, politics, and industry. Number 5, and I think this is the last one. How can the Swiss National Bank know how much money is needed? The Swiss National Bank needs the sovereign money reform to be able to fully control the amount of money in circulation. Swiss National Bank collects the best statistics on the economy and therefore has the best overview as to how much money is needed. What's new is that it alone can create money. This is a necessary precondition for it to be able to take on its full responsibility of acting in the interests of the country. Individual private banks don't act on economic data for the country. Rather, they only act from a limited business perspective with the aim of maximizing shareholder value. Spot on. The information from finance and capital markets doesn't disappear in a sovereign money system. These markets function as they do today, making risk assessments and setting prices. Finally, if banks are lacking the funds they need to make loans, they can ask to borrow funds from the Swiss National Bank. So, I wanted to comment on one of those. What was that piece I wanted to comment on? What's new is that it alone can create money. This is necessary precondition for it to be able to take on its full responsibility. This, in my mind, is kind of leading a little bit towards, oh, well, since we have that new system in place and the central bank's creating the money, which hasn't been discussed here, I'd be curious to know, when this bank creates the money, when you give the sole power of that bank to create the money and no longer the banking system, the Swiss National Bank has the authority to now create all money. Is that bank going to do what we've all been doing, which is wrong, in telling the government, you need $10 billion in extra money? We need you to print up $10 billion worth of treasury notes, bonds, to put on the market at interest, and then once that exchange happens, we'll give you the $10 billion, and then your citizens are going to pay taxes on that $10 billion for the next 20 or 30 years, and then at the end of that 20 or 30 years, you got to pay them back in full. That whole piece doesn't need to be in there. And I've been talking about this for a while. Bill Still, with the Money Masters documentary and the Secret of Oz documentary, both are similar. Secret of Oz is more modern, with a few changes that I think I don't know if there were maybe mistakes or clarifications that he wanted to fix, I think. Highly recommend it. The Secret of Oz, Bill Still. But he said you don't have to have these bonds created. You're borrowing money at interest. Just print the money. Don't borrow it. Just print the money and use it. No bonds. You don't owe anybody money. You don't owe them, interest that you then dump on the taxpayer. It doesn't have to happen. At the same time, since you're printing all the money, you can use the money now to pay for all government services. Hey, taxpayers, you're no longer going to ever be referred to as a taxpayer going forward. As of this day, we sign this into law because we will print the money we need for tax collection for ourselves. So essentially, we're going to pay for ourselves, fund ourselves. We have a money tree. It's called a printing press. You now don't have property tax. You don't have driver's license fees. You don't have income taxes. You have nothing. We just will pay for everything ourselves because we're printing it. And we're doing so without interest. So I hope that this goes through for the Swiss. And then I hope they realize, oh, you know what, while we're at it, Bill Still and that Secret of Oz theory, we might as well do it. We're already set up to do it. And then the next thing we hear is that they've taken off with it. And like it says here, at that point, you won't need, as much as I hate to say that, you don't need precious metals or anything backing your currency. You don't need anything backing it. The government has the right to print it to pay all its bills. And like I said before, imagine, the business cycle, which is called the boom and bust cycle. Every 7 years it appears, right? We're just up, down, some are worse. Depression, oh my God, up, recession. Not as bad as depression, but still terrible. Up. All that would go away because if you have a downturn in the economy, number one, a lot, I might even venture and say all, but at least a lot. Why do I hear this? It's that thing. Get that thing out of here. These little fake microphones. A little plastic thing. You talking, echoes. I'm like, why am I hearing a right ear? Like this little echo. What is that? A little fake microphone. Thought I was hearing. I thought I was going crazy for a second. So, now that I lost my place and what I was going to talk about, we just start over. If they print the money without interest attached, all taxes go away, right? So we're talking about the boom and bust cycle. I will venture and say that most, if not all, bust cycles are related completely to the financial banking industry. So doing sound money thing here just might stem that. Therefore, we may find, wow, we haven't had a downturn in ever. We have these little teeny tiny, business cycles, if you will, but not these big ones like we used to deal with, and lots of layoffs and all that. No. It actually looks pretty good. But even if there is a little downturn, and it's just some normal thing that we all have to deal with the rest of our lives. Imagine hearing, we understand, the unemployment's up a little bit, and the government doesn't have to lie anymore about the numbers. Any government on the world, that is. Driver's license offices. We normally have 30 people working here. Government employees. We understand there's a recession. We're going to take in 10 more employees per location. If they each average 30, we're going to add 10 more. So we'll have 40 employees. Oh, and that's the driver's license place. What about the post office? What about, imagine all the government agencies you can think of. And all of them, we need you to increase your employment by 5%. Just add 5 more percent. Now that example I gave you is a lot more than 5%. But let's just say, increase all government agencies' employment by 5%. Because we're in a low recession, and since we're printing the money and it costs us nothing and there's no interest attached, we just continue paying for that. Therefore, welfare is completely wiped out. Handouts are completely wiped out. You don't get to sit on your fat butt at home collecting the welfare check. You now have to work. And you will be working for the government as a government employee. But at least you're working and getting paid. And then when the economy maybe picks back up, or during that time, you can keep putting your resume out. Yeah, I got a job here because I needed it. But this isn't what I want. I don't want to work in the driver's license office. But hey, I've got a job. I've got a roof over my head. I get to pay my bills. I don't have foreclosures, right? The whole foreclosure nonsense won't happen because everyone's working, right? This whole thing would make everything so smooth. It's unbelievable. It's insane when I think about how stupid of a system we've been, like I said before, we have incredible feats of technology. However you feel we got the technology in the last 100 years, it doesn't matter. Just look at where we were 100 years ago, 150 years ago, till now. It is nothing short of amazing. But we're still using the same ancient banking system, fractional reserve lending, borrowing money into existence. Why do you suppose that is? Because the people that run this planet, the banker class, very, very top banker class, have done it for centuries. And they don't want to give up that power and money. So it is for people like them and the Swiss to go forward with stuff like this. Although I'm going to wish you guys a lot of luck, because if it's on a voting machine that's electronic, you just sealed your own fate. What you need to do is have a referendum, another 100,000 signatures needed, to go back to voting on paper. And then you'll find out, well, let's go vote on the voting machines to determine if we're going to vote on paper, and find out that a massive no majority of citizens just makes no sense to them. We don't want to go back to paper. We like the electronic rigged machines, which will then expose the fact that, you know what, maybe these machines are rigged. And then I'm going to have to ask, how do you get out of that? If you can't vote your way away from the machine because the machine is telling you everyone voted no on that, no matter how good it is, how are you going to get out of that one? And I have to ask us here in this country too, because we use those same machines, which is why Hillary Clinton is on the front cover of the 2016 new cover, 2016 Economist magazine. She is the next president. She has been selected. And I can't wait to see how they pull that one off. Take care.